Hey, good evening, everybody. This is Dirk from the PrimeXBT Trading Academy with a live stream on Sunday evening. I hope not all of you are watching Netflix right now, but some of you want to join me today on this live episode of that crypto show to prepare your trading strategy in cryptocurrencies and, of course, legacy assets for next week. So on today's show, which is going to last maybe around about half hour, I want to share with you how I prepare for a new week of trading. I want to show you 4 hot charts really that I prepared where I think there might be a lot of action next week. I'm going to live place my trades also on those charts for you so you can see exactly how I prepare my swing trades, that is. Now, swing trades means that this is not a scalping strategy. This is not a day trading strategy. We are talking here about positions that potentially we want to hold on for a longer time frame, meaning for a couple of days, maybe even a couple of weeks. In one case of the charts I've prepared for you tonight, even we are going to talk about a very, very long-term perspective for an asset class, which I think is very, very exciting, really. So make sure you watch this episode until the end to really, really get the whole picture. If you like what you are seeing here, I would be very, very happy if you leave us a like and if you subscribe to our channel. That way, you know, we are encouraged to offer you great free content like this in the future as well. And if you have any questions, you can, of course, get in touch with us, for example, by email under academy@primexbt.com, or just drop us a message here on YouTube. If you're watching on YouTube, that is. If you're watching on Twitter, maybe you want to choose the way of sending us an email. So if you have any questions, if you would like anything covered, please don't be shy, send us an email. All right, let's jump into it. And we are going to talk today about, like I said, 4 charts that I've prepared, 2 of them being crypto assets, 2 of them being legacy assets, which I will very, very much, focus on, which I am having a very close eye on at the moment. And I have prepared some trades there, some areas where I want to enter and exit the market. I'm going to share that with you. We are also going, in the second part of that show, going to talk about some economic events that are going to happen next week that will definitely, if the numbers are outside of the forecasted range, influence the markets. More on that later. So I'm going to make myself a little bit bigger here right now. Here we go. First asset I would like to talk about is Terra Luna. And for those of you that haven't seen one of the last episodes of that crypto show where I talked about Terra Luna, or the Terra Corporation, I think it's called, preparing to buy $3 billion worth of Bitcoin to back their stable coin called Terra. This really has become reality. So they have committed to those buys. I think they have completed all of them, or almost all of those buys right now, which of course also was a good demand out there for Bitcoin, which drove the price higher. And back then in that show, I said the area to watch, and we were down there, I think between 90 and 88 US dollars, is 100 US dollars. And this really became true. And one thing that is really, really important, I think, in when we enter a case, especially where an asset enters a price range where it never has been before. So the last all-time high used to be here slightly over 100 US dollars, actually 105 US dollars. I remember last week when I did the video, I said, for me, Terra Luna, or Luna in this case, is a strong buy if it crosses the barrier, the resistance it was here at 100 US dollars, and closes above it, which exactly happened. We had this happening on, let me get my cross out here and zoom in a little bit for you guys, on the 29th of March. where Luna closed at 108.72 to be precise. And what we saw then really is a classic truth of technical analysis. And this is one of the principles, really. If you have nailed this one down and you're not day trading, just from daily charts, really, or weekly charts, even if you don't have a lot of time to spare, if you have nailed this truth down, it's really almost impossible to not be successful long-term in trading cryptocurrencies, or as a matter of fact, any asset that is out there. And that is the truth of, what's my drawing tool, my brush here. And let me switch back to my arrow. Come on, arrow, here we go. And that is the truth. Once an area of former resistance, or it could also be an area of former support, if the chart is pointing down, is broken, what you'll usually see is it's broken in a massive way, and this is exactly what happened with Luna here. And then first the prices will reverse down to that area of resistance, which now is an area of support. So in our case here, talking about Terra Luna, exactly $100. And you can see how it's really picture perfect, by the book plate, really, support and resistance. This is exactly what happened. And so Luna went down again slightly under $100. It closed above, and then it took off, really. So if you ever see something like this on charts, really, if you see a massive breakout from through a zone of support, resistance, sorry, in this case, and then the prices come back, you want to have your orders ready at where formerly the area of resistance was, which was here around about $100. So there was a great chance just 2 days ago, actually, to enter the market here in Luna at precisely $100, maybe slightly above, maybe slightly below that, actually. And of course, the question now is this going to continue or not? And if you are a little bit trigger happy, let's point it like this, because we are, of course, entering here in no man's land area. You know, we don't have any reference in terms of price, really. Maybe we have a reference in terms of what Bitcoin is doing, more on that later. But in terms of what Luna is doing, we don't have any reference, because we are really in a no man's land. Luna has never been there before. So the way I want to play this really is that if the price once more should reverse down here to $100, I want to buy Luna next week. And I'm going to put my stop loss somewhere in this area between 84 and 92, because this is where we last saw the lows. And this was confirmed by the last swing, so to say, before we break out. We had the price oscillating here for a very long time. If we go all the way back, it's not that long, actually, until end of December 2021, beginning of January, mid of January 2022, this was always where you had a lot of price action doing. So this would be our zone of stop loss. But for now, what I would like to do is I'm going to go to my trading account here. Here we go, Luna. I want to place an order there. And I want to do so for 100 Luna, which is around about 11,200. The current price is going to be, because I'm going to choose a limit order here. I mean, let's put it at 100.50, because we don't want to put it exactly at the area of the last support there. And so I would buy here around about $10,000 worth of Luna. I'm going to put my stop loss in this case. Let's have a quick look again at the chart here. It's hard to say. Because there's so much room to the upside, I'm really willing to put it down here to 84, maybe $83.5. But of course, that would also mean that I'm risking like $17, let's say $18. I want to earn 1.5, 2 times at least. So I'm aiming for a price target here somewhere in the area of 136 US dollars. So let's put this in there. Stop loss price is going to be 82 US dollars, and my take profit would be somewhere at 136 US dollars. All right, let's check this again. I want to limit by 100 Luna, so that's around about 10,000 US dollars at a limit price of 150, stop loss 82, take profit 136. GTC means in this case good till canceled. So until I cancel this order manually, it's going to be valid on the PrimeXBT trading platform. Send order. Here we go. And you see here on the lower left now the order is ready and is going to be monitored. So if I turn down my my PC now, my trading station here to say I'm the platform is still going to monitor my order, and if I'm steep and the price drops to my limit order price at 100.50, my order is going to be executed. So no need to leave your a laptop or your mobile app or wherever you want to order online. All right, good. So this is the first chart, and you can see really in the past days, especially in the past 7 days, Terra Luna had a great performance of 24%, 25%, has come a little bit down now again, maybe because Bitcoin also reversed a little bit. Nonetheless, really promising, the first stable coin out there that wants to use Bitcoin as a measure of collateral reserve currency. I'm really excited about this. I think this is exactly what the market is looking for at the moment. Let's have a quick look here. No questions in the chat. If you have any questions, really just throw them out there in the YouTube chat later on. If we have some time left, I'm more than happy to answer those. All right, good. So next one we want to look at is the king of cryptocurrencies. It's Bitcoin. And the picture really here is the same like in Luna, although I want to add an additional layer here. So we have our 3D view here in terms of what we can derive from the on-chain metrics. And two things here. So first of all, if you guys haven't been sleeping the last couple of months, you saw since the beginning of January, really, we had this trading zone between around about 45,000 US dollars on the upside and about like 33,000 US dollars on the downside. Now, ignore those two boxes for the moment. What happened there last Sunday, that was so 1 week ago, was that actually on a Sunday evening, which is highly unusual because usually the weekend is kind of a time with low liquidities, we saw Bitcoin breaking out and really also closing the day on a high note. And in the following 2 days, it even continued to attack this area of 48,000 US dollars here and reverse one a bit. And this is exactly the same pattern we saw on Terra Luna just now. We had let me take my brush here. We had the price of Bitcoin leaving an area of high resistance. It tried like 2 times before, actually 3 times before, if you want to count. Well, we have to count this one as well, to go above this area again, and it didn't. And now it did with really it did in a quite spectacular way. And what happened here again is what I played in this instance is, again, I was waiting for the price. This is for a swing trade, so this has nothing to do with long-term hodling Bitcoin you want to hold on maybe for the rest of your life or for the years and months to come. We are talking about a time horizon for swing trades of maybe days or maybe a week to 3 weeks maximum. And what I like to play this again, and the principle is the same like we just had in Terra Luna, to wait until the market retraces until this area here that formerly was a resistance. Now I've pointed out green because on the way down it becomes a support again to buy there. You would put the stop loss then at slightly below the last low, which in my case I got pretty lucky there because it was horrendous. So the Thursday really was quite a day. What you see here with this move to the downside all the way to 41,000 US dollars was the result of the European Parliament voting for a new anti-money laundering framework, where the way it looks now, us Bitcoin users are going to be forced to report like everybody that sends us money, every wallet where we receive money, and so on and so forth. It's a little bit more complicated than this. There's a lot of stuff out there talking about this, and it still has to pass some more instances to really get into effect. But it was a huge blow to the Bitcoin community in terms of keeping things private, and that really had the price breaking down again. And for a moment there I thought, okay, this is the next China event we are seeing here. Last time something like this happened when China forbid mining cryptocurrencies or owning cryptocurrencies in general. But really the magic happened here. We saw the price then very quickly reverse and close again over this area of now support at around about 44.5 to 45,000 US dollars. So in my opinion, should we see the price reversing this week into this area, this would be an area to buy. And I'm going to put in an order here as well for, where do we have it? Bitcoin US dollars. Here we go. So I want to buy limit at around about 44,500, 0.3 Bitcoins. For this one, I'm not going to place a stop loss first, because usually with my Bitcoin trades, I see them really very, very long term. And due to the volatility, it's also likely if we cross down here that we fall into this box, and more on what this box means after I finish my order, and how I'm going to handle that box as well. So I'm just going to place an order here, limit order at 44,500 GTC. Good to cancel. Here we have our second order ready again. Now, these two boxes you are going to see here are something I want to take from so-called on-chain metrics. Excuse me quickly. And on-chain metrics are like a 3D view on what is going on transaction-wise with Bitcoin. As you know, all the transactions in Bitcoin on Bitcoin are recorded on a ledger. This ledger is publicly accessible, and you can very much see, for example, there at which prices, what amount of Bitcoin was transacted. And there are several companies out there specializing in analyzing those prices. One of the best one, in my opinion, is called Glassnode. So I use them actually a lot to on that crypto show to show some things, to show especially also where areas of support and resistance are. Now, the last time they looked at so-called URPD was on the 27th of February. So these areas of support and resistance I'm showing you right now might still be a little bit outdated. I hope next Tuesday, when the next report comes out, they are going to update this. But in general, what you can see is like where were highs and lows price-wise, where a lot of Bitcoin were transacted. And what you can see here, the highest transaction on up to 27th of February was in this area of 38,000 US dollars. And it's a little bit like a curve. You see this goes all the way from 35,000 to maybe here 43, 44,000. So that means for us as traders, that seems like a lot of Bitcoin changed their hand then. So a lot of people were buying, obviously, again. So this seems to be an area where there is a large support, where maybe people are willing to buy again. And so this green box here I've painted on the chart really starts at the 22nd of February, so at the release of this report. And you can see every time the price reversed, it somehow stopped here somewhere in the middle of this box, sometimes more to the low, sometimes to the up. So my plan really is here, should we break this area of support at 44.5 again and go down, I think Bitcoin will have, without any horrible news at least coming out there. This is always a game changer. So fundamental facts always outweigh technical analysis, of course. So without any horror news coming out there that are really flooding the blockchain, this is a very good area, in my opinion, at the moment to buy. So should we go down, my next area to look for buys here would be somewhere between 14,500 all the way down to 33,500 US dollars, really to keep those Bitcoins long term. First area of resistance, then again, interestingly enough, starts here at around about 47,500 US dollars. And you can very well see, if we look here at this, that this area also was the last area where the price was rejected. And remember, this area of resistance was found all the way back in late February. So the price really rejected, because this is an area, and we can look at this here again. So this is the second one you see here, where the orange bars rise a little bit. This was an area where a lot of people bought Bitcoin again. A lot of people maybe sold their Bitcoin with losses as well, or maybe with some winnings. And those people might be happy to get out. At one point, the pain becomes too much. You want to get out of your position. You just cannot see it anymore. And this is an area to find there. Interestingly enough, in my opinion, if we go even higher, the next area where, let me delete this quickly. The next area where we really see a lot of resistance would be between 55,000 and 58,500. And then the last area between 63 and 64. And I think this is so special, because if we zoom out, you can see here the high, of course, the all-time high, the last one was around about 69,000 US dollars. But it seems like on the way down, as you don't see a lot of transactions anymore, coins last transacted, seems like on the way down, a lot of people that bought on those high, near at the all-time high or close to the all-time high, sold their Bitcoin, so gave into the pain. They couldn't see anymore Bitcoin dropping by 30, 40, 50%, and sold their coins maybe down here. Very, very interesting. So this led to this area of support again. People that gave into, in this case, really FUD. So in summary here again, 44,500, the first area where it gets interesting for me. Then I would like to see the price moving up here into this area of, let me zoom in again into this area of 47,000+. Should we see toppish patterns like we saw here again, you can put your buy order, if it was executed really down here, to break even, really. Maybe even you add 100 or 200 or 300 US dollars, so you are left with some reward there on your position. All right, good. Next one I want to show you, and my God, I've been talking almost for half hour already, is the S&P 500. So the largest US stock market. And I want to give a very, very long-term outlook on this one, actually. So I've covered this end of January already, where I stumbled upon an analysis here on TradingView by a user called Trading Shot. Trading Shot, if you happen to watch this at any point in the future, I am bowing my non-existing head towards you. It's one of the finest analysis I found so far this year. And this gentleman, I think it's a gentleman. If you're a lady, I apologize. And found out that there is a so-called US election pattern. And why this is, by the way, important also for Bitcoin, in my opinion, I'm going to show you after I explain the pattern. So what he saw there was that after a presidential election, so the last, he marked here the 31st of October 2016, where Donald Trump was elected for the next 4 years, there's a time frame of 455 days where the stock markets rise very much. After that is followed by some crisis modus, which is of course very long. And in this case, after Donald Trump here, or in the election time span of Donald Trump from the 29th January 2018 until 2nd of November 2020, which was, I have to look at my notes here, which was, did I take this down? I didn't take this down. 508 days, I think it is. And so where things get a little bit problematic. So in the area of Donald Trump, the impending doom, so to say, or the overhead covering all of this was the US trade war against China, where Donald Trump put all those extra taxes, import taxes on Chinese goods. Of course, China answered to this, and he did a lot of things that Donald Trump does. Then after he was dethroned, so to say, and Joe Biden was elected, which was beginning of November 2020, we again saw this time span of 450 days of really, really good growth on the stock market. And if you compare this time span here, so this 455 days to the time span before under Donald Trump, they look very, very much alike. Now, what he says is that we have a underlying doom, so to say, hovering over our heads again, which in this case, of course, is not only the tensions between the Ukraine and Russia. It's a full-fledged war now. Back then, when he made this chart, which was end of January, of course, those were still tensions. Now we are seeing a full-fledged war there between, should put a strain on the market. And it did. And if we are seeing the same pattern following here, like we saw last time, maybe with the exception of what we saw here in the beginning of 2020, where with COVID hitting the markets, of course, the market was exaggerating to the downside here. We should see the following pattern play out. So 31st of January, I've marked here. The first target then would be on the US stock market to test the all-time highs, maybe go potentially a little bit higher than the all-time highs at end of September, beginning of October. So somewhere between 4,800 median on the top side, maybe over 5,000, or touching the 5,000 on the bottom, somewhere between 4,600 and 4,700 points. Then, for whatever reason, we don't know that, maybe inflation is really still a problem there. Maybe the Fed has to raise the interest rates more than they anticipated to. Maybe, there is war-wise something going on, which we don't even want to imagine now. The market will plunge again to a target of, on the upside, 4,000 points in the S&P 500, on the downside, somewhere between 3,600 and 3,700 points. And this would take place somewhere end of the year 2022. So between the 3rd of October or end of September, beginning of October, and the end of the year, we would see quite a huge plunge on the stock markets for whatever reason. Then again, followed by because maybe whatever is happening there is resolved by a time where the stock market goes up and makes a new high on the 26th of June, so around about half year later, 2023, at around about 4,500 days. Now, this is if this pattern should exactly play out like it played out before. And the reason I'm showing this to you is because of what I showed you guys last week in terms of on-chain metrics from Bitcoin, where I said, it looks a little bit like we are not really through the whole bear market. And if you've been a watcher of that crypto show, you know that Bitcoin likes, at the moment at least, to copy the stock markets, especially what the S&P 500 is doing. And so we would see maybe Bitcoin also copying what we are seeing here until end of September, early October, what we are seeing here on the stock market, maybe reaching, something like all-time high or close to all-time high, maybe a little bit higher than all-time high even, before plunging down into this possibly area again of 40 or 30,000 US dollars. And remember, the market still perceives Bitcoin cryptocurrencies as a risky asset. And as a risky asset, of course, it will copy what the stock markets are doing to a larger extent. So when the stock markets are going up, usually you will see the cryptocurrency markets going up by a higher margin, maybe 1.5, 2 times, 3 times, 4, 5 times as much. The same applies to the downside. And this, of course, is something that can be completely bollocks. Yeah, this might not become true, but I think it's important to kind of follow something like this. If you see like, okay, we are approaching, it's end of September, we are somewhere around the all-time highs, maybe a little bit higher, maybe a little bit lower on the stock market, and then suddenly you see the stock markets going down, there's like, it becomes more likely that this plays out, and maybe you want to prepare your game in trading cryptocurrencies as well. And this kind of suits very well to the Bitcoin cycle as well, in my opinion. So again, shout outs to Trading Shot. I really like this. We're going to definitely have an eye on this if really this becomes true. For me, from a technical standpoint, one of the best analysis I've seen so far in 2022 we have already, right? Good. Any questions? No questions, you guys are not asking any questions today. All right, good. Let's move to the last chart here, and I've picked for this Euro US dollar. And I've done so because, in my opinion, it's always an indicator for the broad market. And if we look from a technical point of view here at Euro US dollar, we see we've developed a clear downtrend. Actually, this downtrend is in place since the beginning of January 2021, where we peaked here somewhere at around about 1.23 US dollars. The US dollar has continuously become stronger. And of course, it did so because it's a risk-off scenario that we've had here since COVID struck, where people are looking to buy US dollars, so US dollars going down. And in my opinion, I wanted to show this chart actually because I know a lot of you guys out there are doing technical analysis also on currency pairs. Me being somebody that is very actively trading currencies, not only cryptocurrencies, but also currencies in the form of options, I think there's a lot of misconceptions on how far you can go really with technical analysis on currencies. The Forex market is the largest market in the world. The daily volume is the annual GDP, gross domestic product, of Japan. So there's a lot of stuff going on there. It's almost impossible to manipulate, in my opinion. And in order to trade there successful, you need to be able to see the big picture, in my opinion. And the big picture here is at the moment that, and we had this for a long time already, we have an interest rate that is in the USA higher than in the Eurozone. So if you look at the United States here, we see we have an interest rate on average of 0.5%. If we look at the Euro area, we see we have an interest rate of 0%. Now, why is that important? Because that means money is attracted to US dollars. If you are running a pension fund, if you are running a hedge fund, if you are running anything maybe where you have to invest a little bit more conservatively, so where you cannot go crazy and go leverage all in on cryptocurrencies, you are looking for conservative investments, which usually are so-called treasury bonds. So bonds emitted by countries, for example, the USA, which have a high chance of being paid back to you. So they have a good rating by Standard & Poor's or Moody's, and they also have pay good interest. And at the moment, the amount of interest you're going to get paid for US bonds is higher than for European bonds. So what you are seeing, it's higher than in large areas of so-called first world countries. And what you are seeing then naturally is that entities, institutional investors are going to buy US bonds, which is going to be, which equals buying the US currency, because US bonds are denominated, of course, in US dollars. So this is called a carry trade, by the way. So if one economic area has higher interest rates than the other one, the money is probably going to be attracted there for terms on investment. And this is why we see actually for quite a long time already the US dollar getting stronger. So euro US dollar as a chart going down means the US dollar becoming stronger. And this is not, of course, without sometimes breakouts to the up or down, but you can see really simply by this trend line here, every time we try to break out, we're really fake outs. And if you follow the pattern I've just shown you to wait for breakouts from zones of resistance or support and waiting until the price comes back here, you can see here very clearly you would have been stopped out here with a loss in this instance. This one maybe would have been a little bit better. You at least would have had the chance here to go to break even, but you would have speculated against the trend. So in terms of positioning, this means really for me that I would like to see this week euro US dollar reversing somewhere to this area here around about 111.30 to 111.50, where I would short it, where I would sell euro US dollar with the goal of buying it back somewhere here in the area of 110. So quite nice trade, because you need to you can put the stop loss here slightly above the last height at 112. But, and this is the big but here, is we need to have an eye for whenever we are trading currencies, especially at the economic calendar. And what we are going to see, we are not having that much data actually next week coming out. So I've gone here to myfxbook.com. They have a quite good economic calendar my way. You can filter it to just the important events. We're just going to stick now to the events that are maybe important for the Eurozone and for the US zone. And there's one event, in my opinion, that sticks out really this week, which is going to be on Wednesday at quite late European time at 8 p.m. again, which is the FOMC minutes. So the Federal Reserve Bank meeting up and kind of giving away not giving away, but indicating how their playbook is going to be for the next weeks and months. And this is going to be very important, because what people want to see there, or what the market is expecting, I should say, is that the Fed is going to continue to taper, meaning they are going to continue to reduce the program of buying domestic bonds, and that they are going to continue to hike the interest rates. And they indicated last time that they want to hike up to 8 times. One time we had already, so another 7 times. Whereas the European Central Bank has said they are still giving this whole thing time. Maybe they are going to raise the interest rates in, the second half of 2022. So the interest rate gap between the USA and Europe at a tendency would go farther, would widen, which would mean again that investing in the USA, buying US dollar would become even more attractive. Thus, maybe if we are not interrupted by anything unusually happen, the price of euro US dollar going down potentially to test those lows here at 1.08, maybe even going to parity. So this is something we want to have a look on, and this is something you have to keep in the back of your mind, like where is the money pressure coming from on the currency markets. And clearly it's here the investments tend to be done in US dollars at the moment. Thus, the demand for US dollar is going to be higher. So you might not, take a contrarian standpoint there at the moment and to time the lows where you want to buy. You maybe want to wait until you see a signal which indicates that you can sell euro US dollar. If you are trading another currency pair where US dollar stands in front, so for example, US dollar yen, you have to do the opposite position. Of course, you need to buy US dollar yen, because selling euro US dollar means you are selling euro, you are buying US dollar. Buying US dollar yen means you are buying US dollar, you are selling Japanese yen. So always emphasis on where the buy action is happening here. All right, guys. So this really is it for tonight. I've kept you away from your TV already far too long. I hope this is going to help you a little bit, not only for this week, but for the potentially longer term events that are coming. If you like things like this, of course, please leave us a like, subscribe to our channel. That would be very much appreciated. Special offer for you. If you're not yet a member of the PrimeXBT Trading Academy, a client of PrimeXBT, open a trading account. You can find the links below and use the promo code THEROOM. So you can use this promo code here. If you go to your margin account, if you click on account here on the left, and if you enter it there, so you would need to enter here the room, and there you will get a discount of 50% on trading fees. And the trading fees on PrimeXBT are already very, very low in my opinion. So another deduction of 50% really can get you a head start. The less trading fees you pay, obviously, the more money you can keep for yourself if your trades are winning. Okay, I hope you enjoyed everything here. If you have any questions, as I said, drop us a message at academy@primexbt.com. We are more than happy to cover all of your questions. We are going to answer, of course, all of your questions that come by email as well. I'm going to see you very, very soon again next week on the next episode of That Crypto Show. Until then, stay safe out there. Take care. Remember to always use a stop loss and have a good start into the week. Take care. Bye.